All right, good morning, everyone, and happy Wednesday. Let's do a quick sound check here in the Essentials room and over on YouTube. And your pal T's got a sinus infection from hell. I am hurting. But it is Fed day. You can't sleep through a Fed day. We have the QQQ pre-market, 5 cents away from the big 400 level. So sinus infection aside, we got a few things to discuss here. And I think the biggest is just QQQ at 400. And I want y'all to look at it from two different perspectives. The daily chart's a little extended, just a little bit extended. We are coming up on 400, our big round number, big sexy level. It's a big psychological spot. And then you got JP today. So, there is one outcome where the market rallies into 400. We hit the big level. And then maybe things take a little bit of a breather. Not so much the market topping, not so much a reversal into a downtrend. Maybe the market takes a little bit of a chill pill. So there's one potential outcome. That kind of thinking, where the Qs are going to hit 400 and then pull back, that kind of thinking is fighting the squeeze. And in my, how long I've been trading for? I'm coming up on 12 years. In my 12 years of trading, I found the best way to lose money is to fight a big squeeze. So we are at an interesting spot where, we're at the target. Things are a little technically extended, but we got all these big squeezes, a lot of which just fired. So everything's pretty brand new. And then a lot of which haven't even fired just yet. So starting here with the Qs, we know all about that weekly squeeze, and that only fired 3 weeks ago. Doesn't mean we have to go higher. We could hit 400 and then pull back. What can a weekly squeeze do for you? Here was your last one. 3 weeks into that squeeze firing long, the Qs proceed to go up another 50, 60 bucks. Could this weekly squeeze at least take us towards the previous highs around 410? I don't think asking for too much. So the weekly squeeze just fired. And then, your daily chart's a little extended, but we do have a brand new daily squeeze. And a lot of times what that's going to give you is just continuation of that trend. You get the first leg to the upside, and she was a beauty. You get the first back test to your 21. We'll call it the first break in the action. Look how good everything holds up. Momentum never crosses negative. Structure remains perfect. That brand new squeeze, I think, could take us back towards that 410. But they got to get through 400 first. And then you're seeing that same theme throughout the rest of the market. The S&P 500, never mind a weekly squeeze and a daily squeeze, the S&Ps have got the monthly squeeze. And it might happen as early as this month. We are right on the verge of getting that monthly buy signal. Structures, let me see, structure is perfect. 21 above the 50, the 50 above the 200. The only thing we're waiting on is that momentum cross. It breaks negative back here. So that was back in May of 22. First, you lose momentum. And then once you lose momentum, you're liable to lose structure. They never lost structure. 21 never crossed through the 50. We never traded under the 50. We never got negatively stacked EMAs. So the only thing you saw here was a break in momentum. A little bit of chop. Brand new monthly squeeze. When momentum crosses back above zero, it can all unfold a little bit like back here. Now, that was a special circumstance. It was COVID, the vid. So I don't think we're going to see something of that magnitude. But just that concept of momentum breaks, you enter a squeeze, they never really break structure. And then as soon as momentum reloads, you get continuation of that trend. So we're pushing, we take a little bit of a breather, you get that momentum cross, and then you're right back up. We pull back a bit, momentum breaks, you go right back up. So as far as your monthly structure hasn't been bad since 2008, 2009. So I think we're looking at a trend that really started back here. June, July of 2012. Had the financial crisis, structure broke, momentum broke. It takes them a while to clean up that mess. But ever since 2012, we're just kind of cruising here. So with that as the backdrop, with a big giant monthly squeeze in the background, again, I'm not trying to advocate, wake up and buy calls on everything today, but just this thinking going around that the market has to pull back, this thinking that the market can't go any higher. I think I think you're fighting a tough fight, trying to go against all these big squeezes. And then on the stock side, take a name like Amazon, an important stock, a big heavily weighted stock. Amazon just fired a monthly squeeze. That's this month. So now for the first time in about almost 2 years, Amazon's monthly chart is poised to go higher. Haven't really had that since COVID. Momentum broke, structure broke, and now they've cleaned it all up. Momentum back above zero, a little bit of improvement in the structure, and now that squeeze fires long with a monthly buy signal. That's a good enough signal to take an Amazon towards 180. So again, I'm not saying that's going to be the outcome. Today might be the top for Amazon. Today might be the top for the whole market. A little tough to think Amazon can't go higher when it just fired a giant monthly squeeze. Now to add to that, very tough for me to think Amazon can't go higher when it just fired this Monday a weekly squeeze. Monthly squeeze target is 170. The weekly squeeze target is 160. Take it a step further. Tough for me to think Amazon can't go higher when a monthly squeeze just fired, a weekly squeeze just fired, and we have a brand new daily squeeze that hasn't even fired just yet. So the squeeze is just your buildup of energy. Getting long during that buildup of energy and then riding that wave, it's a beautiful thing. Trying to fight that release of energy, trying to pick the top, trying to get short, that can be a really tricky game. And if you're doing that solely based on the market is extended, all right, based on my rule of thumb, the market's overbought, so I got to short it. That shit ain't going to work. Excuse the French, but that's not going to work until these squeezes run out of gas. You look at a name like a Microsoft, and I know you're all on top of these, but good to review. Microsoft just fired a weekly squeeze a few weeks ago, and we've got a brand new daily squeeze. So never mind the weekly charts, never mind the monthly charts. Simply focus on the daily time frame. Look at all the squeezes we have. Oh, where's my money makers? Money makers. Apple, daily squeeze, daily buy signal. Amazon, daily squeeze, daily buy signal. Google's got a daily squeeze. Tesla has a daily squeeze and a buy signal. The semiconductors have a daily squeeze and a buy signal. Microsoft's got a daily squeeze, and the Qs have a squeeze and a buy signal. Never mind the fact we got a lot of weekly squeezes, a few of which already fired. Never mind the fact we got a few monthly squeezes that already fired. Just take your daily squeeze, and they all grade out really well. QQQ, daily squeeze with a big 3 score of 9 on the weekly, 10 on the daily, and 9 on the hourly. Until things drastically change, I can only see that squeeze firing long. What about the semiconductors? 9 out of 10 on the weekly, a perfect 10 out of 10 on the daily, 9 out of 10 on the hourly. Until that drastically changes, I can't see that squeeze doing anything other than firing to the upside. So my advice for today, with all that being said, 400 is a big level. And then we got to hear from JP and the boys later this afternoon. So what I'm trying to say is maybe we blow through 400, maybe we don't. If by chance we hit 400 and then begin to pull back, I still think we have a lot of different things telling us try to buy that dip. Weekly squeezes, monthly squeezes, daily squeezes. Until those things change, if we do hit 400 and get a little bit of a dip, I am looking to be a buyer for the time being. So we got our Google right now. We got some Tesla. One that I would like to get some of maybe today is Amazon. And the way I would play it would be something like a February or a March expiration 160 call. Buy the out the money calls, and then from there, you're working your targets. Daily squeeze fires that should take you towards 155-ish. Where I think that gets a little bit bigger, the daily squeeze firing should trigger the weekly squeeze. Or it should trigger continuation from the weekly squeeze. That takes you towards 160-ish. So I like Amazon, and then Meta. Might not a Meta, but you probably heard of her. This one's got a nice weekly squeeze as well. Now compare this to Amazon. They both have nice weekly squeezes, but I can't buy all of them. So process of elimination, I would have to go with Amazon over Meta. They both look good on the weekly, but man, Amazon's daily squeeze is a little bit more my flavor than that daily chart over there in Meta. So I would go Amazon over Meta, but I don't think Meta's a bad pick either. March, April expiration. And then Tesla's being a bit of a toughie. I could have made my life a little bit easier had I just stuck to my rules. And my rule was I'm only going to jump back into Tesla because we had one trade a few weeks ago, and that worked really well. My rule was, and I probably shared that rule with those of you here in the room, I will jump back into Tesla when and only when the indicator prints a buy signal on the weekly chart. As y'all can see, no green arrow, no green bar. We never got that weekly buy signal. So by breaking my own rule, I might have to sit through some crap here. But I'll continue to urge you, when the NIF momentum crosses back above zero, the weekly buy signal should trigger. And then at that point, your weekly squeeze, I think, is valid for a push back towards 300. Right now, the target is up there around 306. So I think you undercut that a little bit. Try to play for a push towards 300. But if you do that before the buy signal, like I did, you might have to sit through a couple of weeks of less than favorable price action before you catch that push. Compare that to, again, Amazon. Amazon's already going for it. So you want to buy Tesla right there, right on top of that weekly 21, just as soon as that buy signal prints. Now you're in a beautiful position. Imagine back here at 130, 135-ish, you're buying those calls on Amazon. The squeeze just fired. We are just beginning to go for the breakout. You'd already be in a position where your calls are up. They'd be up nicely. Now you got some flexibility. Maybe back here you bought 5 calls. Up here you can sell 4, take the majority of your profit, and then you leave one on as a runner. Better yet, if you bought the calls back here and you gave them enough time till expiration, and then you got the patience and the discipline to try to ride that squeeze into that 160-ish target, you need 1, maybe 2 of those per year. And at the end of the year, that one trade where you caught it at the weekly 21, you rode it all the way into 3 ATR. At the end of the year, you'll see how much that one trade adds to your bottom line. You don't need 15, you don't need 10. If you can get 1 or 2 of those per year, that moves the ball forward nicely. It also covers a lot of the junk. The trades where you make a little bit, the trades where you lose a little bit. You catch a couple of these per year, guys. It covers all of that and it moves that ball forward. So when I look at a Tesla, we are not there just yet as far as a signal. But as far as the spot, as far as a potential entry, this is where you want to pay attention. What most traders will do is when Tesla's breaking out above 280, all right, now they're interested. Man, Tesla's looking good. It's coming up on breakout scans. It's coming up on volume scans. If you really want to maximize that profit potential, try to get it when nobody wants it. And I think that timing comes from when do I get my buy signal and how close to that 21 EMA is the price. Another one I think along the same lines that I want you all to watch right now is Microsoft. Don't get interested in Microsoft up here at 385. Get interested in Microsoft right here. Right on top of that daily 21. Brand new daily squeeze. The goal should be you buy Microsoft here. And then by the time it's even trying to break out, you've got a list of things you can do. You can cash out on most of your position. You can roll your position out into further calls. But that is a spot to watch it. Think in terms of options pricing. Over the last 1, 2, 3, 4, 5, or 6 days, what's happening to the out-the-money calls on Microsoft? They're not doing too much. If anything, to your benefit, they're losing value. That 380 call, that 390 call, every day Microsoft spends just trading sideways, it's getting a little bit cheaper. But we also know if that squeeze does fire and Microsoft breaks above that 385, those calls are going to explode. You don't want to buy them as they're exploding. Find that squeeze. You buy those calls in the quiet before the breakout traders want them, before the volume traders want them. And then, like JC says, you catch that push, you feed the ducks. Everybody and their mama and their mama's mama, they're going to watch some Microsoft calls up here at the breakout level. Feed them those calls. Buy them down here for $1.50. Sell them to the ducks up here for $3 or $4. So I like that on Microsoft. I like the in due time. I like the weekly squeeze here in Tesla. We've got the weekly squeeze over in Google. And then it all comes down to the little old man today. So I think our friend Powell's got one of 2 options. One, he comes out today rocking his Santa Claus hat, says all the right things, he wears his blue tie, and he gives the market his blessing to rally into the end of the year. So Powell could be Santa, or Powell could be the Grinch. He could jump on the mic today. He could be wearing his red tie. And he might say all the wrong things, and then from there, down we go. So I do think there's a decent chance, whatever the outcome today, that might set the tone for the remainder of the year. Kind of crazy to think we're almost done with 2023. But all right, guys, I'm not going to hang out and do any Q&A this morning. I'm going to try to jump back into bed, get some sleep here. I want my energy and my wits about me for Powell. But the biggest thing I'm going to leave you with today is just don't fight the squeeze. The simplest way I can put it. When we have squeezes on bigger time frames, we reach these points where the 30-minute chart, the hourly chart, even the daily chart, they get so extended. So we're sitting there watching the 30-minute, watching the hourly, watching the daily, and we're thinking, based on most rules of thumb, man, the market can't go any higher from here. All right, we're too overbought, we're too extended, we got to pull back. Where that tends to blow up in your face, like shorting a market just because it's extended, is when you have a big, giant weekly or a monthly squeeze. And we just lived through this. So think back to March, April, May, June. We just lived through the same exact thing. I can promise you, when the QQQ was right here, every lower time frame was overbought. Your 30-minute chart back there is overbought. The hourly, the 2-hour, the 4-hour, the daily. You could even argue the weekly chart. It was a little bit extended. Shorting that simply because it's extended is fighting that squeeze. All right, Qs are at 320. Time for a pullback. Weekly squeeze says, hold my beer. Let's rally another $70. So just be mindful of that. And then my only other piece of advice would be if you're taking trades based on these bigger time frames, the Amazon weekly squeeze, the Tesla weekly squeeze, the Google weekly squeeze, give yourself the gift of time. There's nothing better, no better feeling than, okay, I think Amazon can hit 160. So I'm going to buy calls that expire in 5 days and see if I can't get that push. We all know damn well. You buy those far out the money calls, you only give them a few days till expiration, and you actually catch the move. Boom, right? Home run, grand slam. I'm a bit more of a fan of time. If I think Amazon can hit that 160 in 8 weeks, I'm probably going to give that trade 12 weeks till expiration. What's the worst case scenario? Worst case scenario, it makes that move a little bit quicker. Percentage-wise, maybe I don't make as much as I could have. But the benefit is if Amazon goes sideways for a week, or Google. Google's a great example. You got some call debit spreads here in Google. If they expired next Friday, I'm not a very happy camper. Reason being, Google's not exploding towards 150. But my trade expires in February. I got a little bit more breathing room, a little bit more wiggle room. I can comfortably sit through a little bit more chop. And then if Google does head towards 150, I'm still going to get a great return. Percentage-wise, maybe not as big of a return had I bought calls that expired in the first week of January. But giving myself a little bit more time, I can see that setup play out. For our Tesla trade, we're all the way out there in March. Which frankly to me means I'm really not too concerned with whatever Tesla does. If it blows up in my face and goes to zero, all right, so be it. It expires all the way in March. I got plenty of time to trade around that and make other trades. Here comes March. Lo and behold, Tesla's cruising towards 300. It's going to be a big trade, like a 4 or 5x kind of trade. So focus on your bigger time frame squeezes. Be mindful of fighting them. And if we do happen to get a dip here or a pullback after JP today, mark up your levels of support. Tighten up that watch list. Know the names you want to buy, know where you want to buy them, and then more importantly, know where you're wrong. If you want to buy Amazon, where's your line in the sand? Where are you going to look at Amazon and say, okay, this is no longer a valid setup? Whatever that level might be, your best entry is going to be buying it as close to that level as possible. I think the line in the sand for Amazon is the weekly 200 at 138. I'm going to get my best risk reward. Buying Amazon as close to 138 as possible. But all right, y'all, I'm going to hit the sheets here. Again, apologies for it being a little bit of a quicker session. Apologies for not hanging out and doing any Q&A. But I will be back on the mic today at... Let me check the schedule. I am out of it. Where am I? Who am I? What time am I on the mic today? This is what happens, guys. I go out for a weekend, try to live a little bit, try to have a little bit of fun, and they get me. This is twice in a row now. I go to Orlando for the Simpler meetup, come home with some Mickey Mouse souvenirs in COVID, and I went to an NFL game last weekend. Okay, I am back on the mic today at 9:30 Central, so just about an hour from now. So Mastery folks, I will see you all about an hour from now. And then for all the good people tuning in on YouTube, keep an eye on the channel this coming Sunday. This Sunday, I'm going to release a big video covering my whole game plan for 2024 and all the finer details in terms of, what are the names I'm going to focus on? What are the setups I'm going to focus on? How am I separating my swing trading from my income trading? So that will be on the channel this Sunday. And then, otherwise, finish up strong this week. Enjoy the holidays. And we'll see what JP's got up his big sleeves here today. But all right, y'all, have a good morning. And I will see you again in an hour. Adios.